So I thought this video could discuss a topic that most people don't want to discuss or they want to avoid, and that is taxes. But January the 30th, people will get their, W-2 or their 1099. And so I thought this might be a good time to discuss, how to file. File. If you've ever seen, if you're older and you've seen it on someone's desk, or if you've seen it in a movie, but there's this round thing with this tall stick thing that is sharp at the top. And then the secretary, when they took a phone message, would put it on this stick. And so that's where this comes from. When you take, but it's not, but it doesn't mean to take a message or leave it there, but it does mean to file. It's something that's, on a stack. So think about that. So I put a piece of paper there, and I put a piece of paper there, there. So it's the stack. So that's how that formed. Anyway, so there's one thing, if you're single, then you can file separately, or you just yourself. But if you're married, some people think or wonder, is it better to file separately or together? So the word is jointly, right? So I would say together. You could do jointly. This is something and this is something, and you put it together. And so that can mean any kind of like a relationship, anything that's joined. So you could do jointly, or you could do it together. I think because this is with and this is together, so you could do together. Either one of those concepts would work for this. And so there's this long article, but I didn't want to discuss the whole thing, but they did kind of break it down on how you decide if you want to file separately or together. So they said things to consider to file together is if you have children, because you get those like the earned income credits and the child care, those things, you get those types of deductions, and I can discuss that in a minute. And then the second things, it would you would benefit because you would have a larger standard deduction, and that's without the medical or student loans or that things. But it's just a standard deduction. It's larger if you file together. And then the third thing, if you and your spouse, so when I say spouse, I don't know if it's a husband or a wife, right? So when I say and me, I would say my husband, but I don't know who's out there, if you're a female, or if a male, who's your spouse. So I do husband and wife to mean spouse. So when I say so if your spouse, I just do husband and wife because I don't know which one it is. So if you and your spouse have similar, kind of the same income, it would be good. So it doesn't matter if you have children or not. So they said that they have more tax breaks, benefits, because we're so used to saying breaks. It's not really a break, right? This is to take a break. I'm going to take a break, or I broke something, or you can take a break. You can suspend it, or you can do break in several different ways and how you mean it. Like it's in the middle of something. Let's take a break. We've had like a seminar up here, and then we're going to take a break, and then we're going to have the rest of the seminar down here. You see what I'm saying? So you could do breaks that way. So, or you could say, in this case, the tax break is a benefit, or it's, you have, the tax break would be less taxes. So you could say the tax or taxes are less, or the taxes are credit. Either one of those are fine conceptually. And it says that the standard deduction for 2024 if you file together is $29,200. If you file separately, it's $14,600. That's the standard deduction. So, or if you're single. Okay. So, so the child and dependent care tax credit, like I was telling you about, like if you have daycare, that kind of thing. Earned income tax credit, the American Opportunity Tax Credit, and lifetime learning tax credit. So they have more opportunities to deduct more things. So this was BW2s. You have a lot of paperwork with that, right? And 1099s. So you'd have to have all the paperwork for medical expenses, and it has to be a specific percentage before you can deduct it. And it's normally a lot. So if you've been into the hospital or some treatments or those things, then you can. And documentation, if you've had a business and you have your profits and losses. And also, if you donate to a charity, to your church, or to a charity organization, you have to have the paperwork for that to prove it. And then other things to report your income and your potential tax credits or deductions. Now, let's get to for filing separately. To think about it, to file separately, you may receive a bigger refund. So it depends. You should file separately if you have student loans. If you have a lot of medical expenses, like if one person does and the other one doesn't. If you want to protect your refund from your spouse's tax credits or their responsibilities or liability. A liability is a responsibility. And then if you do a profit and loss statement, when you get into accounting, you have your pluses and your minuses, or however you so choose to do that if you are familiar with accounting. And if you make a lot less than your spouse, you can file separately. So let's see, like for example, you couldn't just like pick and choose, like, oh, you deduct that and I deduct that. So if you have a lot of medical expenses, you can deduct that, but the spouse can't. You understand? And so like if yourself have your own business and you want to deduct the profits and the losses, then your spouse can't. You understand? So you might want to file separately for that, so they're not liable for your losses. If your spouse has a lot of child support payments that are due, they don't want, if you don't want, because otherwise the IRS will take your money. They will. So if you don't want that and they have a lot of these child care or the child support payments, then you would want to file separately so that the IRS will deduct from them and not you. So those are things to consider. And then they said like property taxes. So that includes everything that you get during your marriage, and the different states that include property taxes are Arizona, California, Idaho, Louisiana, and see if you did LA, like LA, Los Angeles, but if you do LA usually means Louisiana. Nevada, New Mexico, Texas, it's a X hand shape in the shape of a 7. Washington, and I do a W this way. Now this is Washington State. If it was Washington D.C., I would still do Washington and then do D.C. I would add the D.C. But this is just the state. And then last, it is Wisconsin. So I don't know the signs for Wisconsin, New Mexico, or Nevada. So I would just do an abbreviation like you would for postal, if you don't know, or you can spell out the whole state. Let's see. So they said that the best way to decide is if there are more tax deductions and credits available when you file married jointly. So, but you can use those, those programs or those software programs that you can buy, like TurboTax, those type. They'll guide you through that to decide which would be better and which is more of a benefit for you, because people want to pay less taxes or they want more of a refund. So you could say money back. I just spelled refund because it's more clear, but you can say for that concept money back, to get money back. So it says that if your spouse died during the year, let's see, it says that they can continue to use the married filing together, that tax rate, for up to 2 years after the death of their spouse. But if they marry again before the 2 years, then you can't say that you're, a widow and married. You know what I'm saying? You can't use that. So, you can't. So, like if your spouse dies, you can file married jointly for a maximum of 2 years. If you marry before the 2 years, then you cannot use your spouse who died. You must use your new spouse. Is that more clear? Okay, so I know it was kind of confusing, but I just wanted to give you the main points about how to decide which to choose, and I think that that's more clear. But I do like the idea of those software programs that can guide you and find out you would make a better, or more money back if you filed together or if you filed separately. So just kind of keep that in mind during this tax season. Everyone hates it. Nobody wants to pay more taxes. I remember when I was in business for myself, that was really the hard part. Is like, oh, I had to pay every year because you own your own business. So anyway, so think about it, discuss it, and just kind of practice it and experiment with the signs and how to use that. So credit, benefit, deduction. So those are easier ones, and that gets more of an accounting type of signing. So just remember your ledger sheet, your profits and your losses, or your pluses and your minuses, however you want to visualize that. So have fun, and remember to sign as much as possible with the deaf or your hearing friends so you can get that feedback. See you later. Bye.